Today I want to talk about the change in the property market and more specifically the sentiment around Sydney and Melbourne specifically, because let's be honest, the last few years have been very generous to property owners and property investors on the East Coast in those two mainland cities. But what we're finding now is this real shift in not around when will I buy a property, but it's more about if I should buy a property. So I want to talk today about a couple of things that you should think about when looking to invest in a changing market. Number one is having a buffer in place. Because the question is often asked, when should I buy my next property? And the answer is really, really simple. Nothing to do with market sentiment, nothing to do with finance. It's all about when your cash flow allows. Because if you're taking the philosophy that we take, and it's not a get-rich-quick scheme, it's a get-rich-slow scheme, you're playing the long game, really what you want to do is you want to be accumulating good properties over time and holding them for the long term. So if you've got a buffer in place and your cash flows allow you to buy another property, I'd suggest that you should buy the next property at that point in time and ignore the headlines. Because the lending landscape has certainly changed, but if you've sorted out your cash flow and you've set up your structure optimally, there's actually no legitimate reason why you shouldn't be investing now. Because if you're flipping or you've got a very short-term time frame, absolutely you've got a different conversation to have. But if you're holding it for the long term, self-funding your retirement, if you have a buffer in place, your structures are set up, there is absolutely no reason why you shouldn't be considering buying now, even though the market sentiment has well and truly changed. So number one, have that buffer in place. Number two is there's a real rare opportunity to have this flight to quality. So it's often hard to think about going forwards into the future, but if you think about the most recent past, having that boom that went through Sydney and having the really great conditions that went through Melbourne, imagine if you could rewind back to the GFC, or back to 2011 here in Melbourne, where the market sentiment was down and you could go and buy really great assets at that time so that you had them ready for when the boom came. You would be sitting wonderfully pretty right now. But right now you have this opportunity to have this flight to quality. You can chase the A-grade properties, much less competition on them, in a market where it's easier to get those properties compared to when it's boom-like. But it's easier, but it seems more scary. But I would say to you, if you've got the flight to quality, because here's where you find out who's been swimming naked when the tide goes out. Who's got good portfolios, who's got good structure, who's got good properties. Now's the chance for you to pick up really great A-grade properties through that flight to quality. So number one, have a buffer. Number two, see it as an opportunity to pick up really great quality properties. And then number three is, it's a time to be opportunistic. Now, everyone loves to pull out their favourite Warren Buffett quote, don't they? And for mine, it's be fearful when others are greedy and greedy when others are fearful. So now you have that wonderful opportunity. There is a bit of fear in the marketplace. There's a bit of wait and see going on. People are sort of thinking, well, maybe I won't act now. Well, why don't you be opportunistic? Why don't you take that opportunity? If you've got the buffer set in place and you've decided to chase quality assets, just know that this too shall pass. At some point in time, in the future, the market will continue to grow and you have a portfolio that is absolutely full of quality properties set up correctly so you can sleep wonderfully well at night. So for me, what I'd say is, yes, the market sentiment has certainly changed in the big cities, but this is the time where professional investors are licking their lips, ready to get into the marketplace and get great properties in preparation as a preemptive strike, preemptive accumulation for what will inevitably come in the future when the market turns and it starts to go strongly again. So my message is really, really simple. Follow those three very simple principles during this changing market sentiment, and you could well and truly set your self-funded retirement up very well in this current market.